This 1 hour trading pattern has made my trading extremely simple. It helps me understand when to take a trade, where to take a trade, and most importantly, which direction the market wants to move. And after 1 year of backtesting this pattern, it has shown profitable results while also getting rid of the guesswork in my trading. In this video, I'm going to explain the 1 hour pattern that nobody talks about, and then I'll show you live examples of how I enter a trade using this pattern in real time. So in this video, I'm going to talk about the 1 hour pattern that nobody talks about. And this is the same pattern that I've backtested over a 1 year period to show results like this. But with results like this, it is very important to remember that it took me 3 years to become a profitable trader, and trading is not a get rich quick business. However, the goal of today's video is I will help you learn the simple 1 hour pattern that nobody talks about. And this pattern will help you avoid complicated strategies like ICT, SMC, or any other difficult system. It helps you avoid using indicators, and most importantly, it gets rid of the guesswork by following one repeatable and simple system. Now, with this being said, this pattern will use 3 simple steps that I will talk about in this video. We will talk about exactly how I enter trades, where to put your stop loss, and most importantly, where to put your profit targets. And then to make sure you understand the pattern completely, because this is the one pattern that I back tested and showed you those results for, I will show you real-time example trades, and that way by the end of the video you know exactly how to use this pattern and what to look for. So the problem with most traders is they will fail because they will focus on range. This is an average trading day. You can see on an average trading day we have a low here, a high here, we then create another low, so you would think that the market structure is bearish. So when you go to short a potential trade, the market actually ends up moving against you back to the upside. Now when this happens and you think you're reading market structure right because you had a low here, you created a lower low, and you're now looking for a short position to the downside, but you still ended up getting faked out, it's because you're focusing on the range. This is way too much noise, and this is why your trading is complicated. You're focusing on too much. So instead, what I'll do is I'll only trade from 9:30 to 11 a.m. Eastern every day. I'll only trade for around 90 minutes a day. And this way, I don't have to focus on all of that range that I previously talked about. Rather, I can focus on the 1 hour candle that I'll explain in this video. So how does this work? Well, for step 1, the market opens up at 9:30 a.m. Eastern every day. It doesn't matter if you're trading option stocks, futures, crypto, forex, commodities. This pattern that I'm about to explain works for all those different markets. But what we need to understand is the market open that we're trading is going to be 9:30 a.m. Eastern every day. What we're going to do is look for the 9 a.m. candle. So the 1 hour candle before the market opens here, you can see the shaded area, and this is just the pre-market. We want to focus on the 1 hour candle here. And this 1 hour candle will help us determine what we want to look for in the day. It's extremely simple what we need to do. If the 1 hour candle before the market opens is bullish, meaning it is a green candle, then we will look to go long or buy for the day, meaning that when the market does open, we are looking for a long position to the upside. However, if this candle is bearish, in this example, this is a bearish candle, then we will look to go short for the day. And this way we have a clear thesis coming into the day. And as we can see here, this market actually ended up going for the downside because we got that bearish candle. And then all we had to do is look for a low risk entry after the 1 hour candle showed that it was going to be a weaker candle. And we already knew that we had to look for that short position. This helps eliminate a lot of noise and confusion on the charts, especially when the market opens, because it can be a very volatile time in the market. And this way we have a clear plan coming into the day. So once we look for that 1 hour candle, for step 2, you want to trade your strategy. It doesn't matter what you trade. If you trade supply and demand, break and retest, you can trade whatever you want. However, you want to trade your own strategy because you want a low risk entry. For us, when I get into the examples, I'm going to be showing you how you can utilize this pattern with the first candle strategy that I talk about, the previous day strategy, most importantly, the 1 candle rule strategy, which I will show you as well. However, if you don't trade these strategies, this pattern still works, and it will be important to watch the examples in this video to show you how you can implement this pattern with your system. So now that we've determined that the 1 hour candle is bearish, now all we have to do for step 2 is go to the 1 1-minute time frame or whatever time frame that you trade. That may be the 5-minute or the 15-minute. And we want to look for a low risk entry. For us, if we use our first candle strategy, which is simply marking out the 5-minute high and the 5-minute low, these are all 1-minute candles, and therefore that would be 5 minutes. From there, because we know the 1-hour candle did close bearish, we already have a clear game plan. All we need is a break below this 5-minute low, and we'll be looking for the retest for a move back to the downside. And therefore, for step 3, all we're waiting for is that break below, and then we enter in on the weak price action, of course, if we're looking to short the trade, and strong price action if we're looking to go long on the trade. In this example, because this is a bearish trade, we are now looking for that weak price action, which we got here. And therefore, all we have to do is put our stop loss at a break back above that 5-minute low, and we need to target at least a 2R multiple. A 2R multiple simply means for every $100 that we are risking on this trade, we need to make $200 of profit. And just like this, you can see this full trade played out. We entered here, and this trade gave us a very nice move all the way back down to lows. These are the 3 simple steps to execute the 1-hour pattern. So with this being said, now that I've shown you exactly what the 1-hour trading pattern is, let's go over to the real charts, and I'll show you how I implement the 1-hour pattern with 3 simple strategies. And this way you'll understand exactly how I execute this in the real markets. Okay, so here we are on the first example. And on this example, we're on the 1-hour time frame. On the 1-hour time frame, you can see this 9 a.m. candle is so far bullish, which means this is a green candle. This shows me that going into today, I will be looking for a long position to the upside. Typically, every 1-hour candle you see, it has continuation into the next hour. And this means if this 1-hour candle closed green, the next one closes green, the next one closes green, and the next one closes green. And you can see this happen multiple times. And therefore, this is a very simple way to come into the day with a clear plan and thesis using the simple strategies that I've talked about on this channel before. And if you want more in depth on exactly how to trade the systems and strategies that I trade every single day, make sure to click the free playlist in the description, and it'll go over everything that you need to learn about these strategies. And you can watch that after this video. But with this being said, because the 1-hour candle is green, let's go over to the 1-minute time frame and see how we are going to set up the day. Okay, so here we are in the day, and what we're going to do on this specific day is simply mark out the 1 candle rule. The 1 candle rule simply states that if we are in an uptrend, the highest down close candle, which is this candle right here, will be used as support for that continuation move to the upside. So in this example, if this is the highest down close candle, this simply means for the lowest risk entry, all we need to do is wait for a break above, a retest back into this level, and then continuation from there. Now, let's see if this sets up for the day. So far, you can see we got the break above. Now we would be looking for the retest back into this area. And as we can see here, we now broke above, and now we're retesting with buyers stepping up in this level. So because of this, we can now look to enter into a long position here. Our stop loss would simply be a break below the down close candle right here. And our profit target would simply be high of day. So in this example right here, we would be risking about $1,790 to make about $3,000 in profit. Let's play out this trade and let's see exactly what happens. So far, you can see we did come near our stop loss, but the candles still are closing bullish. Therefore, we would still be in this trade. A little bit more consolidation for this. However, because we know that the 1-hour candle was in our favor, you can see we actually ended up closing back at high of day. And this was a great but simple example of how to use a 1 candle rule combined with the 1-hour pattern. And this is the exact same trade that I took live in front of hundreds of traders in the Accelerator and Traders Lab to help show the concepts that I talk about in my videos in real time. Let's go over to example number 2, where we will combine this with a different strategy. Okay, here we are on the second example. And as you can see, this 1-hour candle coming into the day is very bullish. This is the 9 a.m. candle, of course. And because this is a bullish candle, we know that we will be looking for that long opportunity for the day. So let's go over to the 1-minute time frame. And now on the 1-minute time frame, the strategy for this example, I will be using the first candle strategy. The first candle strategy simply means that we will mark out the 5-minute high and we will mark out the 5-minute low. But because we know this is a strong name on the day and we know that the 1-hour candle was bullish, all we're going to do is look for the break and retest of the first candle strategy to the upside. So let's play out this trade and see if we get that breakout. As we can see here, we're getting the breakout and now we need the retest. And here we can see we not only got the breakout, but now we're getting the retest with strong price action as well. So what we can do here is look to enter into the trade here. Our stop loss is simply a break of the candle that broke above the 5-minute high, and we need to look for at least a 2R multiple. In this example, we can simply just target out the 442 whole psychological number. This gives us about a 2.47 risk to reward trade. This means we're risking about $2,180 for about $4,930 of potential profit. Let's see exactly what happens if we play out this trade. And just like that, you can see we were able to execute this simple trade by using the 1-hour pattern in combination with the first candle strategy. And of course, I took this trade live in front of hundreds of traders, making sure that they can learn the exact system that I teach in real time. With this being said, let's go over to the last example now, where I will show you how to combine the 1-hour pattern with the previous day's strategy. All right, here we are on the final example. And on this example, we can see the 1-hour candle is very bullish coming into the day. Now, in this example, we're going to use the previous day high and the previous day low strategy. All you have to do is mark out the previous day high from 9:30 a.m. Eastern to 4 p.m. Eastern and mark out the previous day low. However, because we already know that the 1-hour candle is very strong on this day, we do not have to mark out the previous day low because of course we're looking for that move to the upside. So now that we've marked out the previous day high, plus we know the 1-hour candle is bullish, we know that we are looking for a long or buy position on this day. So let's go over to the 1-minute time frame and see how we can potentially execute this trade. So for this trade, we can see pre-market, we're actually above the previous day high. For the previous day high strategy, for the lowest risk trade, what we would actually want this trade to do is come back into that previous day high, show strong price action, and then look for a move back to the upside. That is the most simple way to execute the previous day high and low strategy, on top of understanding that the 1-hour candle is going to be bullish coming into the day. So let's play out this trade and see if we can come back into that previous day high. We can see we actually came back into the previous day high, and we are showing a lower wick, which means that sellers try to step in near that previous day high. However, buyers stepped in, and we are now closing this candle more bullish than bearish. We would look to put our stop loss at the break of low of day. Profit target here would have to be high of day. This would give us a 2.14 risk to reward trade. This means for the $1,580 we are risking, we are looking to make $3,330 of profit by using the previous day high strategy in combination with the 1-hour trading pattern. Let's see exactly how this trade plays out. And just like that, we can see we got some very nice continuation back up into high of day, and we were able to enter this trade with very low risk to capture this entire move back to the upside. Now, this is a trade I took live in front of hundreds of traders, but if you would like to learn more about any of the strategies that I talked about today, or if you're a newer trader and want to start trading from absolutely scratch and don't know how, make sure to click the video on screen now. It is a full 10-hour playlist going over everything I've learned in the last 7 years to help you learn how to become a better trader. If this video helped you, make sure to leave it a like. If you have any questions, put them in the comments down below. Make sure to subscribe to the channel, follow me on Instagram and Twitter for more education, and I will see you next week with a brand new video.